Bitcoin is sitting around the mid to high $60,000 range right now. But underneath the surface, there's a lot going on that most people aren't paying attention to. And honestly, some of it is bullish, and some of it is a little concerning. First, let's start with what's happening behind the scenes. Right now, spot Bitcoin ETFs and corporate treasuries are actively accumulating BTC, basically hoarding supply. That means less Bitcoin is actually circulating in the market. And when supply tightens like that, it usually creates upward pressure over time. On top of that, there's growing discussion around a potential US strategic Bitcoin reserve by 2026. If something like that actually happens, that's not retail money, that's institutional level demand entering the market. So on one side, you've got supply decreasing and potential demand increasing, which sounds bullish. But here's where things get more complicated because not everyone is convinced this is the start of a major move higher. Some analysts are saying Bitcoin is showing signs of stress right now, and historically during these phases, we've seen deeper corrections before things recover. There's even talk that Bitcoin could consolidate closer to the $55,000 range before any real reset. And then you've got more extreme takes, like Bloomberg strategist Mike McGlone, who warned Bitcoin could drop significantly, even calling it a potential bubble scenario. Whether you agree with that or not, it shows how divided sentiment is right now. And the data reflects that. There's about $1.8 billion in options expiring, with a max pain level around $68,000, which is interesting because that's right around where price has been hovering. That usually means the market is in a balanced, indecisive state. Technically, Bitcoin also recently broke below a short-term rising channel and pierced key support levels. So in the short term, momentum isn't exactly strong. And then there's something most people aren't even talking about yet: quantum computing risk. Developers are already testing post-quantum upgrades for Bitcoin because in theory, if quantum technology advances far enough, it could eventually challenge current cryptographic security. That's not happening tomorrow, but the fact that it's being worked on now shows where things are heading. There's even data suggesting that wallets tied to early Bitcoin holdings, including ones believed to be connected to Satoshi, hold a massive percentage of total supply. No movement there, but it's another layer of uncertainty people keep in mind. So when you zoom out, this is the current reality. Supply is tightening, institutions are circling, sentiment is mixed, and technically, the market is still undecided. Now this is where things get interesting, because when you start seeing pressure on Bitcoin like this, whether it's from scaling, security, or increased demand, it brings attention back to one thing. How does Bitcoin actually evolve from here? And that's part of the reason we've been mentioning Bitcoin hyper a lot lately. Not financial advice, but it keeps coming up because it looks like a promising solution to solve some of Bitcoin's core problems. From what I've seen going through their site and white paper, the focus is on improving speed, efficiency, and overall usability, basically building on top of Bitcoin to make it more practical at scale. And it's not just some random project either. It's already been featured across multiple well-known crypto platforms like Bitcoin.com, Bitcoin Magazine, 99 Bitcoins, CoinMarketCap, and others, which usually signals growing awareness. Right now, it's still early, sitting around $0.013678 and gradually climbing. And with early-stage projects like this, timing is everything. Now, of course, and I always say this, there's risk. You can lose everything, so you have to do your own research. But if you are looking into opportunities like this, one thing that matters more than people realize is how you actually buy in. Personally, I prefer using Solana when possible. It's faster, cheaper, and just way more efficient compared to dealing with high gas fees on Ethereum. That said, Ethereum is still a solid option and a lot of people use it. And using something like the Best Wallet app makes the whole process easier. You can move between chains, manage assets, and get into early-stage projects without overcomplicating everything. Of course, tools like MetaMask work as well, but having something streamlined just makes a difference. But bringing it back to Bitcoin, this isn't a simple bullish or bearish moment. It's a transition phase where big money is accumulating, technology is evolving, and the market is trying to figure out what comes next. Not financial advice, but this is one of those moments where paying attention early matters more than reacting late. If you want more updates like this, make sure to like and subscribe, and I'll keep breaking it down in real time.